Okay, so wanted to do a few more problems here to help you prepare for the test. Make sure you know how to do the inventory costing method. So LIFO, FIFO, and weighted average. Make sure you can calculate the cost of goods sold and also the ending inventory. But there are lots of practice problems on those with solutions. So, and there's videos on it too. So that isn't what this video is. If you're struggling with that, you don't like any of the videos on it, or you feel like they're not very well explained, just shoot me an email. I'm happy to do some videos specifically on that. But what I wanted to do here is kind of just three problems. One, a petty cash video, another one calculating gross profit, and then another one calculating net income. So I just kind of plopped. I mean, this is in the exam, three practice problems, but I'm not necessarily answering. Well, not all of this would be in yours. I just put in some problems to go through them real quick. So on this number one, this petty cash one, what I wanted to do is show you how to do the journal entries on it. Okay. The question is just asking for the amount of cash short or over, but I want to do the journal entry. Okay. So it's not asking for this, but first we need to establish the fund. Okay. So when you establish the fund, you're just reducing cash, like normal cash. So reduce it by 150 and then debit petty cash. Okay, 150. So that's how you set the fund up. What's interesting though is you don't end up doing anything with petty cash after that. You only debit it when you create the fund. Okay, so at the end of the period, so this is one journal entry that's required on the test. Okay, at the end of the period, you need to do a journal entry to replenish the fund. Okay, so the logic is this: this is the balance we always want to be at, this 150, and you can see we currently have $25 of cash in the fund. So therefore, if you go 150 minus 25, you know you need to replenish the fund by 125. Okay, but don't. So basically, what we're saying is cash 125. Okay, that's replenishing the fund. So don't do petty cash, just do cash. Okay, is what you're crediting. Then you record your expenses. So, and you can abbreviate on the test too, but office expense 120. Remember, expenses are debit balances. So office expense 120, entertainment expense 20. Okay. And so, and that's all the expenses that it has listed. Okay. So the logic is this. This here sums up to 140. Okay. And obviously this is 125. Okay. So it doesn't balance, right? We need additional money. We needed an additional journal entry over here, okay, to get this thing to balance. And so that is what we call cash short and over. Okay, so just cash short and over. You just put both in. Okay. And so if you have 140, the logic is what is the difference between those two? And that is going to be what this cash short over is. So just 140 minus 125 gives you 15, right? Because that would be at 35, yeah, 15. Okay, that is what your cash short is, 15. Okay, and so obviously to answer this question, the correct answer is B, because you're doing credit to cash short over. Okay, so on the test though, you'll need to make sure you can do this journal entry and this journal entry here. So hopefully you have that down. Pretty straightforward. Okay, next one. So there's two problems here. There's one here, and then there's one here. Okay, these aren't in your practice problem set, but I just wanted to show you. So this one here is calculating amount of gross profit. Remember, gross profit is simply sales revenue minus cost of goods sold. Gives you gross profit. Okay, and that's just a really important concept to understand if you're a business selling products, because I mean, this is what, for every sale of an item, this is what you're netting, right? So if you're selling something for $100, but it costs you $90, cost you that, or to manufacture it, or you buy it from someone else or whatever, then obviously your gross profit is only 10. And then gross profit percentage, which you actually don't have to do on this test, but anyways, it'd be obviously 10 divided by 1. Okay. Anyways, gross profit. Okay. So this problem here, though, there's also there are some basically discounts based on if they pay early. Okay, so we're selling on account. So we sold it for 40,000. Okay, but the cost of goods sold. No, I'm messing this up. Okay, we sell it for 40,000, but they're not actually going to pay us 40,000. Okay? Because if they pay us early, then they get, remember, these discounts. So you get a 3% discount if you pay within 15 days. If you don't pay within 15 days, you have to pay within 30 days. The customer does, and they have to pay the full amount. So you can see, and we can see, let's look at this. So we sold it on April 3rd, okay? And then they pay us on April 10th, okay? So they're paying within 15 days. So they're going to get a discount. So instead of getting $40,000 of sales revenue, we're actually only going to get 97% of that, right? Because they're getting a 3% discount. And so we'll just do that math real quick. 7 multiplied by 40,000. So we're actually only getting the sales revenue of 38,800. Okay, and then our cost of goods sold is 14,000. So our gross profit is 24,000. We'll need to be able to do that on the test. Okay, and hopefully that makes sense. We don't get the 100% of the 40,000 because they're getting the discount for paying. All right, now last one. This last one, there's a problem that wants you to calculate net income. Okay, so net income, you should hopefully know this, but net income is simply revenue minus, or any revenues minus any expenses. Okay, so revenue of 35,000 is positive. Interest revenue would also be positive, but cost of goods sold is an expense, and interest expense is also an expense. And so then we would just calculate the net income and just go 35,000, 12,000, 3,000, and then negative 2,000. So 24,000. Here's our net income. Just realized that delay is pretty significant, isn't it? Hopefully that doesn't screw you up too much. Let me know if it does. And I can do something else. But anyway, those three I want to just share with you. Again, really prioritize inventory costing methods. So FIFO, LIFO, weighted average. Those are worth a lot on the test. And then also just the stuff that I showed on the video. Okay. Thank you for watching and have a good day.